Hello friends. In the next few minutes, I am going to take you through the key events of the recent past and Kotak Mutual Fund's view on equity markets. After a strong rebound in December 2018, market remained range bound in large caps even as broader markets underwent significant underperformance. Market struck a cautious tone as oil rebounded from its low and also impacted the Indian rupee. This was in stark contrast to the sharp rebound seen in global markets. Clearly, market participants tracking the Indian assets seem to be in a wait and watch mode ahead of the political developments likely to take place in an election year. The vote on account budget was presented by Mr. Piyush Goyal, broadly maintained its glide path of fiscal prudence even as the union government promised a few bonanza to taxpayers worth rupees 18,000 crores and to the rural farmers worth rupees 75,000 crores. Clearly, the focus on immediate boost to consumption and the feel good it entails in an election year seems to have taken precedence to infrastructure push, broadly in line with the expectations of the market. Corporate earnings rebounded for the December quarter so far have been broadly along expectations by and large. Volume growth for most consumer companies was relatively strong, and banks, especially corporate facing banks for a change, reported good numbers, indicating that the worst of the NPA cycle is behind us now. IT reported inline results while auto by and large reported poor numbers as volume took a big hit in November and December. Globally, developments on the trade war as well as policy response by China in the form of fiscal and monetary stimulus are key monitorables to watch. Closer home, however, the political developments are likely to overshadow all other developments. It is but obvious that markets like certainty. However, it is equally important to remember that these events have a very little impact on longer term returns. In a bid to optimize near term returns, one shouldn't sacrifice the bigger opportunity, as uncertainty is what provides scope for higher returns in a longer term asset class like equities. Equities as an asset class is best suited for longer term goals, and we would strongly advise investors to benefit from this phase of heightened volatility by investing in equities in a regular and disciplined manner. Time in the market is more important than timing the market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.